Hey guys, welcome to this week's stock market recap. I'm Robert Montez with Link Financial Advisory. Today we're going to be going over what helped the market, what hurt the market, and key takeaways for last week, finishing from May 16th to May 23rd, 2025. So let's get right into it. What helped the market? Well, last week it was primarily more about international equities. We saw the MSCI up about 1.2%, and that had a lot to do with what hurt the market here in the United States, which we'll go over in just a sec. But what helped things domestically, not a whole lot. Last week, the markets were down. We saw the S&P, the Nasdaq, and the Dow all down about 2.5%. But what did kind of keep those numbers from dipping further, where we saw Microsoft have some solid numbers, definitely boosted their stock price up, which of course is a huge part of the index, so that helped there. And we saw United Health have a pretty solid recovery. If we remember last week, their stock prices were down pretty hard, but they had a 7% surge in their stock price, so that did help boost that as well. As far as what hurt the market, two main culprits. Those were trade tensions. So again, the reemergence of trade talks and there being some new tariffs that are coming out. So of course that makes people a little bit leery. But it's something we've been talking about here for the past couple months. So we'll see how that shakes out. It's kind of been week to week. 1 week we're up, 1 week we're down. The other thing was U.S. debt being downgraded. This is another thing that hasn't really gotten a lot of attention, I think, outside of maybe financial circles. But that definitely does create some uncertainty there. Shoot, I'm going off memory, but I believe we're somewhere around like 33 or maybe it was 36. I think it's $33 trillion in debt. You know, that's getting up there. That definitely didn't help things with our debt being downgraded. As far as key takeaways for investors, I would say the same thing you probably hear me say every week is that understand you have to be thinking long term. If we look at the S&P 500 over a long-term perspective, over 5 years, we see it's up about 14% annualized. We see over 10 years up about 13%, over 20 years up about 10%. So just maintain a long-term perspective. Understand that short-term fluctuation and volatility is just part of the game. I would also say look at your strategy and make sure you're maintaining a diversified portfolio. Review that with your current advisor. If you're doing it yourself, just make sure that your holdings are in line with what your long-term goals are. And if you need a second opinion, hey, we're here to help. We've got some great ideas and some great advisors. Be happy to talk to you and get you a second set of eyes on what you're doing. Hey guys, thank you so much for watching. Feel free to leave a comment. Let me know what you think about what's going on in the market and if there's anything I missed that I should have included. Have a great day.